coming is a recession. What your crazy friends might say to you is coming is maybe a depression. You'd be mistaken. Those are lies. What is coming is a collapse of the dollar. You haven't had one of those. We've never experienced the collapse of the dollar, of the world's reserve currency. This will make us Venezuela. Make no mistake. If you want to be prepared, prepare yourself like people should have prepared in Venezuela. Soon, I don't know when, but it will happen overnight. Soon, everything will be collapsing, and the banks will close, and there will be chaos.
Really quick, I just want to say thank you to all the subscribers on the channel. The best way to support the video is hitting the like button. It's free and it gives me some feedback, lets me know you're getting something out of the content. Thank you in advance for the support on the channel. So they redefined what a recession was in 2022, previously only requiring 2 negative consecutive quarters of GDP growth. Redefined to the new definition, a significant decline in economic activity that is spread across the economy and lasts more than a few months. A much more general definition. They do not want the public to panic, and they are aware of the actual detrimental state of the economy. But if you were aware of that, you might have a little bit more fear. The first time in 790 days, almost 3 years, we have seen the inverted yield curve, the longest inversion in history for the past 2 years. Started in 2022, ended today. What happens next? For those who are not aware, the yield curve is the 10-year minus the 2-year treasury. Positive values may imply future growth. Negative values may imply future downturns. All at the same time. Global liquidity index shows all new time highs of almost $91 trillion in the M2 money supply. The M2 money supply being a measure of the money supply that includes cash, checking deposits, and other deposits readily convertible to cash, like checking deposits. So essentially anything that has purchasing power. In these two events, an inverted yield curve turning positive, coupled with record all-time highs in global liquidity, are a rare occurrence. Now, this is a lot of macroeconomic information, and it has large implications on the markets, and these implications are often unknown. So let's leverage ChatGPT artificial intelligence to break down these effects for non-economics experts. So I described earlier the inverted yield curve occurs when short-term interest rates become higher than rates. It's made by just subtracting the 10-year yield minus the 2-year yield. So for example, say you had a 5% 10-year yield and a 3% 2-year yield, the yield curve would be 5% minus 3%, so it'd be 2%, positive 2% yield curve. Now, over the past 2 years, short-term interest rates have been higher than long-term interest rates, so you can lock your money up for a shorter duration and make more money on a shorter lockup. Now, when the yield on the 2-year bond exceeds that of a 10-year bond, it indicates that investors see lower growth in the future and lower inflation, or the possibility of rate cuts by the central bank due to a future slowdown. Now, here's why it's important. Historically, these negative inverted yield curves have preceded a recession by 6 to 24 months. Now, it's not a guarantee, but it's one of the more realistic signals. Now, inject the M2 money supply hitting record highs, and one of the risks we have when record liquidity in the markets is super high is that companies and banks may take on more leverage and debt. And that's exactly what they've done. Look at this chart of global banks and their leverage positions right here. Sorry if it's a little bit quirky, but you can see their positions were in the positives in 2019, 2020, 2021. And since 2021, going into 2022, they are in the negative to the tune of hundreds of billions of dollars. This is a composition of all the major banks in their holding. Okay, so the blue is available for sale securities. The orange is held to maturity securities. But these banks on their balance sheets right now are posting massive debts. And this is massive overexposure, similar to in the 2008 financial crisis when banks were over leveraged. Now, the problem is in 2008, when the banks made massive, irresponsible mistakes Instead of learning their lesson by facing a consequence, they were bailed out and they suffered no punishment. Banks take on risks to make returns. Imagine the precedent when banks take on too much risk, like in 2008, and we just give them a get out of jail free card. Surely the banks learned their lesson and they'll not take on those risks anymore, right? Now there's also massive inflationary pressure. Think about it. There's more money in the economy right now than there has been in the history. This money has to go somewhere, and the more money in the economy typically yields higher inflation numbers. And this is tough because we have been raising interest rates to combat inflation for the last few years. But now we are left in a state with still high inflation, a record number of money in the money supply, and they're expecting rate cuts next month in September and also in December. And look at what ChatGPT concluded. I asked them, what are the effects of when you have record high liquidity and an inverted yield curve turning positive? They said the simultaneous rise in global liquidity and the yield curve turning positive after an inversion creates a mixed environment. This is rare. While the normalization of the yield curve could signal improving economic expectations, the persistence of high liquidity increases the risk of inflation and asset bubbles. Look at the stock market. Financial markets will likely be sensitive to central bank actions and inflationary pressures, creating volatility. Where there's volatility, there's opportunities across different asset classes as investors recalibrate expectations. Now, this is weird because the last 4 years have not been filled with quantitative easing. They've been filled with quantitative tightening. The Fed buying assets, the process of quantitative tightening is when the Fed sells assets on their balance sheet to make the interest rates go up. And if that's not enough, just look at this chart of the official website of the Federal Reserve showing the monetary supply. Right? You can see over the past 50 years, it's gone crazy. And the most alarming thing is during COVID-19, which I can't say on YouTube because of censorship. If you guys use Rumble, check me out on Rumble. I put all my same content, but some stuff that I probably can't say on YouTube. Link in the video description below to Rumble. They stopped recording data on this. Okay? And a 40% increase in the money supply happened in 2020 during COVID-19 because of all the austerity measures and all the spending we had to do. But just think about that. 40% of the money in the supply happened in 1 year. And if you guys want $41 for free, sign up with Webull. It's a stock trading platform. They're just trying to get new users. So if you deposit a penny, you're guaranteed up to $3,000 in free stocks, but typically you just get $40 to $300, but you're guaranteed $40 minimum value. They just hope that in the future you'll do all your stock trading there. You really just have to deposit a penny, sell your stocks, close your account, claim your 41 bucks. You can find a link to Webull in the video description below. And if you guys need a spot to get crypto, check out Uphold. It's where I get my XRP daily. You can find a link to Uphold in the video description below. Here we have Putin talking on Russian television, talking about endorsing Kamala Harris.
That if we can name a favorite candidate, it used to be Joe Biden, but now he is not participating in the election campaign, and he recommended all his allies to support Ms. Harris. So that is what we are going to do. So it was, well, he said that we should, that is why we should also do that.
And now you must ask yourself, as an enemy to the USA, Russia, I think Russia would agree we're opponents. Who would you prefer your opponent to have? A strong leader or a weak leader? This could be why he is endorsing her, an easier opponent for himself. But let me know your thoughts about that in the comment section below. In the Ripple stablecoin RLUSD, Ripple CEO Brad Garlinghouse said this yesterday. It's set to go live in weeks, not months. During a September 4th fireside chat at the ongoing Korea Blockchain Week in South Korea, Garlinghouse said the firm would roll out their stablecoin in weeks, not months. We're kind of in a private closed beta, Brad Garlinghouse said. It's called Ripple USD. RLUSD has been minted in that framework. We will certainly launch soon, weeks, not months. Ripple revealed its stablecoin's ambitions in April, noting that the token would be 100% backed by US dollars, short-term US government treasuries, and other cash equivalents. And this is massive because the largest stablecoin in the market, Tether, which does like 85% of all stablecoin volume, has very shady backings. Their market cap is like 90 billion, and there's been a lot of conversation about what is actually backing up these tethers. No one can actually redeem their tether for dollars like it's said on their website. It's a very hard process, and you have to be $1 billion market maker to redeem your tethers. So the fact that Ripple stablecoins are 100% backed by cash equivalents is good. Greg Garlinghouse went on to say, we felt like there was an opportunity for a credible player already working with lots of financial institutions to lean into the stablecoin market. Totally agree. We need a credible player, not Tether. So I was wrong. Tether's USDT accounts for 70% of the total stablecoin supply. USDC is 20%. And in the future, RLUSD, I believe, is going to have a majority share of this. And Garlinghouse is pivoting. In the past, he had talked about a potential US IPO. He says now we have no interest. SEC approved Coinbase going public in the US, and now the SEC is suing Coinbase for the same things they approved. One of the first pieces of advice I give entrepreneurs who ask me about starting crypto companies is do not incorporate in the USA. You're asking for more legal bills. Speaking on Gary Gensler, he said, I think no matter who wins the election, we'll see new leadership in the SEC. I think Gary Gensler really hurt his party. He's a Democrat, and I think it's hurt them in the current election cycle. So it's exciting that the stablecoin is going live soon. Pardon me. And Smoke makes a great point. RLUSD is a complete solution to the stablecoin market. While USDC is competitive in terms of regulatory compliance, liquidity, and market prominence, the big difference is it lacks its own dedicated blockchain, which limits its ability to offer an all-in-one solution like RLUSD. Ripple has the token XRP to facilitate the value exchange of its own stablecoin. This integration allows Ripple to provide a complete solution, eliminating the need for partnerships with other providers. So I went back to ChatGPT and I asked it to compare Ripple stablecoin with probably the most legitimate stablecoin, I would say, USDC. And the advantages Ripple has: faster, cheaper transactions due to its dedicated blockchain optimized for payments. Integrated liquidity solutions like ODL, which are particularly attractive to banks and financial institutions. Better control over transaction flow and performance due to the dedicated blockchain, allowing seamless integration with institutional finance. And optimized for cross-border payments and remittances, which in the future, that's what stablecoins will do, leveraging Ripple's existing global payment network. So this Ripple stablecoin has me really excited. I'm excited to see where that takes us. And now for this lawsuit. Jeremy Hogan said speculation time. Most likely the SEC just hasn't made a decision whether it will appeal yet. Why? Well, filing a notice of appeal takes only 15 minutes. And after you file that 15-minute notice of appeal, you have 70 days to file the actual brief. So if the decision to appeal was already made, there's no reason to delay filing the notice, especially when you think it's bad case authority out there. But on the flip side, this guy, Meta Lawman, a crypto lawyer, talks about how it's more than likely the SEC will appeal. Take a listen.
I gotta say, I think it makes it a little bit more likely that there's going to be an appeal. Because if the SEC had already decided that they're not going to appeal, then they would just say, no, go ahead and pay us. This case is done. So the only two possibilities now are that they are undecided or they have decided to appeal based on what you just read to me. And typically when you have a large judgment like this, you request a stay to pay it, and if that's denied, then sometimes you can use what's called an appeal bond. You don't have to write a check for $125 million. You can get a bond for, a tiny fraction of that will pay in the event you lose on appeal. So it feels to me like a signal that they're more likely to appeal.
So will they appeal? Will they not? We have lawyers on both sides saying the opposite. It's just going to be a matter of time, but this lawsuit does wrap up pretty soon. Now, there was a post about Ripple launching their EVM smart contract solution recently on the XRP ledger. and it had a lot of flare up in the XRP community. So I want to address what Ripple CTO said about that release. So let me clear up a few points. Ripple simply cannot and absolutely does not want to unilaterally change the XRP ledger. The blog post is Ripple saying that we see the value in bringing programmability to the XRPL mainnet, right? This smart contract addition to the XRPL mainnet is going to bring these Ethereum developers who have made this Ethereum blockchain so valuable over to build on the XRP ledger. And we're making this a priority right now. We're committed to putting out a design proposal for community review. Instead of coming out with a proposal already baked, our intent was to be transparent and show where we'll now be focusing internal resources and priorities due to the due diligence, and come back to the community with our thoughts. Why the sudden change? As many pointed out, I focused on the fixed functionality of the XRPL and EVM sidechain at Apex earlier this year. I genuinely didn't see how smart contracts on XRPL mainnet would work without turning XRPL into a different chain. I had combos in the past few weeks with Orchestra Finance and others in the community that made me recognize that the programmability on the mainnet can work if key challenges are addressed. I think the best way to mitigate these risks is to take small steps that lead in the right direction, and it's great to have the historical data of how hooks has worked on XAL. I fully acknowledge that the plenty of smart minds that came together. In conclusion, that programmability makes sense for the mainnet much earlier. Why now? Besides the above, we also felt it made sense to share our thinking ahead of the XRP community gatherings in Korea, right? It makes sense to release this update instead of just announcing it on stage at a conference, because these are important in-person chances to discuss this new update. This is honestly the only reason for the timing. There's no hidden agenda. We're committed to regular community calls, design reviews, and blog posts explaining considerations. So it's always good to see leadership to come out, to be involved with the community, and to kind of dispel a lot of fear, uncertainty, and doubts. And guys, thanks for watching the video. If you made it this far, you made it 17 minutes into the video, I really do appreciate all your support. Comment smart contract if you made it this far. I don't take your time for granted, so let me know you're a loyal supporter. You finish the video by commenting smart contract. God bless you all. Until next time.